Hi, everyone. In case you didn't know, CPI is tomorrow. We have some longer term charts to go over. I pretty much stayed out of the markets, and I am currently out of the market, but we'll talk about my thesis going into tomorrow. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at the economic calendar real quick, you can see CPI is basically the only thing that's going on tomorrow. Core and regular year over year and month over month, definitely going to push the markets around. Expect a lot of volatility in the early hours. This is 8:30 a.m. Eastern Time, so 7:30 Central. And then later in the afternoon, we have the federal budget and a couple of Fed presidents speaking. Obviously, they're going to refer to the CPI and potentially give us some foreshadowing on what the Fed might do in their February meeting. But yeah, keep an eye out for this. Watch the markets in the early hours and potentially see what the markets are going to do going into the rest of the day and the week. And in case you forgot, earnings season does start on Friday. It started a little bit already, but some big players come out on Friday. Moving over to the S&P 500, starting with the daily and the weeklies. Not much to say on the lower time frames, basically rallied throughout the session, gapped up, and continued on. So let's hit these higher time frames and talk about some of the big levels that we need to watch for. We still have this gap between 394.50 and 399, where we gap down really aggressively on the down move. Obviously, we're expecting that to fill, which comes right into resistance on the daily chart. This is the downtrend that we've been following for quite a while here. You expect that gap to fill. And then once we get up to that point, we might chop along the resistance, maybe overshoot it slightly, trend line to hold, and then we would get the bigger down move, in my opinion. It's certainly possible that we get a double bottom back down here at 378. But do you expect this downtrend to hold? If we do get that stronger rejection, you have to entertain the fact that we might come down and double bottom at the most recent lows from October. And if we do get a move like that, it's going to be pretty aggressive. If you look over here at the move down from August, we covered about 12% in about 16 or 17 trading days. Yeah, about 13% in 18 trading days. Pretty rough down move. I don't know necessarily that we're going to get a repeat of that, but you definitely have to be ready for the potential that that could happen. Say you should have a plan to the upside, but it just seems unlikely. I mean, if we do get a breakout, a retest, and a continuation, that would be great. But right now, my expectation is we fill the gaps, hit resistance, come down at least double bottom here, if not break through that level and come down to 357 here on the S&Ps. Moving over to the NASDAQ on the daily and weekly, you can see we're right here, just past resistance. We hit the 55 EMA on the daily, got just past that as well. If we do come up and fill these gaps, that would be a significant move higher. I don't know if we can really get that filled tomorrow. That would be huge. We'd have to get all the way up to about 287, which would be a large move from here, about $10 in the next day or two. I don't know if we can really get that done on the NASDAQ. Certainly could happen. The NASDAQ has definitely made moves like that before. You can see here, we went from about 263 all the way up to 291 in just a couple of trading sessions. Big move there that we saw. And it's certainly possible. Maybe we gap up, rally through the session really aggressively on strong CPI data, kind of like we had last time here where we gapped up, fell throughout the session, and then continued down. Certainly possible, gap up, rally through the session, hit resistance, and then we get a sell-off the next day or two. Couple of scenarios there, but the gaps to fill a little bit tougher here on the Qs. And then looking at the weekly chart, you can see we just touched that 9 EMA on the weekly. Expect to overshoot all of those to the 21. And if you look here on the weekly, again, right at resistance, similar trend. And you would expect that to fail at that point. Remember, the NASDAQ is a little weaker here. We already tested the lows here from October. We did not make a higher low the way that the S&Ps did. So if we come up, test that, and we fail, you have to expect that we're going to make lower lows here on the NASDAQ and at least come down into this 255 zone, which would be about $30 to $40 of downside potential. And that's really where the move is going to be, in my opinion. Moving over to the Russell on the daily and the weekly, you can see here the Russell's already filled all the gaps, so it doesn't need to go any higher. It's really turned on the burners here. You see how big of a move we've had here on the Russell. On the weekly, you can certainly see we come up and touch the 55 EMA on the weekly, which will be at 187 just about. So another $5 upside, get the CPI push, touch that, get rejected, continue down. That's really going to be a pretty big nail in the coffin here. You can see if we do get rejection at the 55, then we're going to have all of the EMAs in line. We'll have the 144 that we got below here on this latest push down, 55 in between there. And then if we get the 9 below the 21, that could certainly be a bigger waterfall sell-off here on the Russell. That would make this a big area of consolidation after the first push. And then you'd be looking for that second push on the weekly chart, which could really make some lower lows. I mean, who knows where you could go from there. We do have some levels maybe down at 145. That would be a huge move, about $45 of downside potential on the Russell. Yeah, that would be the next major level that I'd be looking at, about 145 from where we are right now, if we do get that sell-off from the 55-week moving average. It is worth noting, though, definitely don't predict that kind of a move. It certainly could break out from here. The rally that we've seen has been very aggressive. The Russell has been stronger than the other indices, and it's one to watch here going forward. Moving over to IYT once again on the daily and weekly, pretty much in that same vicinity that we had with the last CPI reading, came up just above resistance. You could probably redraw this trend line. Either way, same vicinity, might come up and touch the 55, similarly to what we saw on the Russell. That's currently sitting at 234 here on the weekly. Touch that, push down from there. It's definitely going to look very weak for all of the markets. And this is pretty much make or break here for a lot of the markets. We either push through and we bottom out where we already have, or if we push down from here, that's going to indicate some really difficult times here for the markets. Moving over to semiconductors, similar thesis, didn't quite fill the gaps, has to get up to about 224. So a couple of points higher here. Looking at the same thesis, the 55 coming below the 144 on the weekly. That would be a really big cross to the downside. Otherwise, you see a lot of strength here on RSI on the daily and weekly, still pointing to potential upside. Again, if we get extended here on the daily, if we do get that big push up, maybe up to resistance at 229, that should put the daily into overbought conditions, really starting to look for that downside potential here in semiconductors. It is worth noting that they were quite strong, stronger than most of the other sectors here going into the last week. So that's something to pay attention to going forward after the CPI data. Moving over to the dollar, just on the hour and 4 hour here, just to point out, the dollar's just in a holding pattern. It's waiting to see what happens. It's been flat for the last 2.5 days, and it'll be flat going into the CPI. Once we get CPI, it should give us some direction. But right now, dollar's not doing much at all. Moving over to JNK, we talked about this yesterday. If this doji was a turnaround point, that would be very weak for markets. But we didn't get that. We gapped up and rallied through the session, almost got to those previous highs. You expect it to take out all the stops here on JNK. Once we get that push, then you expect rejection sitting at least $94, probably take out all the stops above that previous high. It is worth noting here on the daily chart, this does look like a bit of a reversal, pretty strongly above the 144. Moving over to the weekly here on the right side, certainly potential we push up to maybe $96. That would be the next level that you would look for, right at the 55-week moving average. You do have a high here at $98 to look out for, maybe you overshoot to $98 and then get the sell-off. But either way here, looking fairly bullish, surprisingly. Definitely looking for that overbought condition here on the daily chart. If you do get into that zone, that's going to be a big indicator that we might be looking for that turnaround and starting to build that divergence to the downside. Moving over to TLT, another strong session here. You can look at the daily chart here to the left. Momentum is still strong to the upside. You expect a retest of the 144-day moving average, currently sitting at 107. It is worth noting that we have this island reversal left down here at 99.50. If CPI is really bad, then you would expect the bonds to sell off, along with tech, meaning that the Fed is going to continue to raise rates aggressively, and that people don't want to own bonds in that kind of environment. So yeah, looking for the reversal at 144, at 107. You do have a couple of levels here at 111 that you could be looking at on the weekly chart, maybe 112, come into that zone. That'd be a pretty strong push from where we are right now. We'd have to cover a lot of ground. But if CPI is strong, it certainly could push us up there. Then you get the reversal, and then you get the push down, and then come and fill these gaps. They'll probably get filled at some point. We also have gaps left down here at the bottom of this overall reversal, sitting down at 94.50. So definitely potential for that bigger move down, get a very solid bottoming formation at that level, and then we get the bigger reversal. Just a couple of scenarios there for TLT. Moving over to the VIX, finishing up with the charts here on the hour and the 4 hour. You can see we got oversold conditions on the VIX yesterday. Did rally from there just slightly into the CPI reading. You would expect that based on the volatility that's expected to come. Could certainly see a big spike like we had here. We had the big CPI reading in December where we got quite high. I do expect this to spike up at least a little bit regardless of what the CPI reading is, but if inflation goes up even moderately here, then you would expect this to break out to the upside and push equities to the downside. Moving over to my accounts, you can see I lost just about $40, $45 here today. I plan to stay out of the markets, took a couple of short day trades, not much to speak for. But yes, I have no positions going into CPI. We'll get that reading tomorrow. I'm sure there will be lots of momentum plays to be looking for based on that reading and what the markets are doing. And then if we get some clear direction, then we can take some at least medium-term positions going into Friday. Comment down below what you think the markets are going to do based on CPI. Do you think it's going to be high or low at this point? Or does anybody even care about inflation? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. I make this video every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.